Hey everyone, happy Monday. I am back with another Monday market update. I'm CaitlinMcKeague. I am a real estate broker here in Phoenix, Arizona. Welcome to my channel where I do an update on what's going on in the Phoenix real estate market every Monday. So thanks all of you for joining me. We are live today and talking about all things Phoenix real estate. So let's get into it. And if you're here, drop me a comment. Let me know that you're here as part of this live stream. Love to know that I'm not alone and talking to outer space. So we're going to start with talking about builders and what's going on with new construction. So got a few little articles here. Let's move me here. Let's take this off so we're not distracted. Okay, cool. So builders call new home market unhealthy and unsustainable. That's not the best headline to see. So forced to slow down new construction as buyer demand plummets, builders predict lower home starts through 2023. And this is good news in some ways because we don't want builders overbuilding, right? That's what we did in 2007 leading up to the financial crisis. We had way too many homes for the people that wanted to buy them. And that was one of the reasons we had the crash in addition to lending issues, but we had an oversupply of homes. And so, hi, Cato, here for the Cromford report. Yes, we will get there. So we don't want to do that again. We've learned from that. However, this does create an issue because if we do pull back too much, we're already undersupplied and we know that. Is this going to further undersupply us once the demand comes back? And so this is saying single family home starts dropped in September. We're down 5.6% since the beginning of the year. They also said that the multifamily construction is now slowing, dropping 13.2%. So there is a bigger change with that than the single family home market. But regardless, you know, it's kind of a delicate balance because we don't want to overbuild, but we also don't want to get ourselves to a place where the supply we're behind on building again, like we've been for the last 15 years, especially here in Phoenix. So this section here is talking about, it's understandable that they're cautious of in light of slowing home sales. However, he notes the current annualized rate of 1.44 million new units is lower than the historical average of 1.5 million. Maintaining the historical average is necessary to accommodate the rising population. So we'll see what happens with builders. I know they're still giving a ton of incentives right now to buyers to purchase, usually the incentives towards their closing costs or, you know, rate buy down and that kind of thing. Some of them have taken their base prices down. There's a lot of negotiation going on in new construction right now. And new construction or builder sentiment is the lowest it's been since, I can't remember what year they said here, 2000, it was in here somewhere and I must have overlooked it, but builder sentiment is not good right now. So let's talk about mortgage rates. This is the reason why we're having all of these things happen in the real estate market. Mortgage rates punch through 7%, but may pause for Fed clues. So we are in the sevens, lovely. And this is talking about how the Fed is going to continue to tighten and increase the federal funds rate. So what's been spoken about is November will be a 75 basis point hike, and then December may ease off a bit to 50 basis points, but that's still a pretty big change. And so if that happens, we may not see too much movement in rates just because it won't be surprising, right? It's the issue becomes when we create a surprise for the markets, that's when they react. And so if there is no surprise, we may not see too much fluctuation. 7% is definitely so high compared to where we were at last year. And the fact of the matter is our prices have not come down that much. So although, you know, it's slowing the housing market and it is bringing prices down somewhat, it's getting us to a place of unaffordability because these rates are so high in conjunction with prices that just really haven't changed all that much, at least not significantly enough to offset the mortgage rate. So this goes on to talk about where rates are at, and as I was mentioning, the Fed policy, what they're looking at. I talked about this last week, but we do have to think a little bit about, are we taking this too far with these rate hikes? Because the housing market is responding. But if we're only looking at closed sales numbers and that kind of thing, that's all lagging indicators. But we know that demand is really low right now compared to where it was before. We know that sales are really low. So it's being affected by rates. The Fed is doing their job, but how long do you continue to do this month over month before we've nosedived? Or, where do you kind of pause and see what the effect of these things are? So there's, a lot of factors in this, but that's where rates are at today. Robert says payments have doubled for many new buyers. Ouch. Yeah, I think payments for like your median 1,500 to 2,000 square foot single family home in Phoenix right now, I think you're looking at least $3,000 a month, which is just crazy. $3,000 a month to think about for just kind of the average home in Phoenix. Appreciate your research and hard work. It is very informative. Thank you. I appreciate you guys following, and I'm glad it's helpful. Let's see. Phoenix show and tell, Fed funds will go up, but we will see mortgage rates stabilize and possibly pull back. So yeah, that's what I was just saying. I think that could happen if they continue on with the track that they're on. It seems like that wouldn't be too surprising. Hey, Caitlin, I'm here for the weekly dose of updates. I'm still keeping tabs on the Valley from afar, still out traveling for work. Thanks for letting me know. That's awesome. Glad you're here. Thank you for joining. The Fed was too late and has been too fast. Yeah, I agree. It's, I think they were a little bit late to the party, and then they've tried to overcompensate a bit. And now we are slamming brakes on things, and we'll see where things land. So let's talk about affordability, because this is what I was just mentioning. Nearly a third of income gobbled up by monthly mortgage payments now. The share of income required to afford a mortgage has risen to 30%, well above the established norm of 22.8% of a homeowner's income, according to an analysis by Zillow released on Thursday. So again, this is looking at on a national standpoint. So it's different than looking at this, in the Phoenix market specifically, but it still really applies. So we've gotten to a point where things are just really unaffordable. 30% of your income has to be used to purchase a house versus the norm of 22%. So on a national level, home prices are about 25% higher than they would need to be for affordability to return to normal. And Zillow's forecasting relatively flat home values for the next 12 months. So we're just, in a situation where rates are almost doing more damage than where home prices were going, because we're no more affordable. We're just less affordable than we were when home prices were continuing to increase. So, that's kind of a scary number to look at, the 30% compared to 22% of people's income. Home values would need to fall 24.7% nationally to return to the 22.8% norm of housing affordability. Locally, some markets are closer to reaching this. So Hartford, Connecticut being one of those, and then also Baltimore, Maryland. But they're saying places like Salt Lake City, Dallas, Vegas are all the furthest away from ideal affordability levels, all at least 37% higher. I would say Phoenix is probably looped into that, probably Boise, Austin, all of those places that have been hot on the list for a while. So let's see, question. Do you think sellers will lower prices moving forward, or are they sticking to the asking price? Are sellers starting offer a lot less than asking price? Or buyers? Okay. Are buyers starting to offer a lot less? Yes. So we are seeing a lot of offers come in below asking. That's pretty typical. And then buyers are also asking for concessions. Sellers are lowering their prices if they have to sell. And that is the difference. We don't have sellers out there right now that don't need to sell. If we do, they end up becoming or if they don't need to sell, they end up becoming canceled listings because they're just not getting their price and they don't need to sell. But the ones that do need to sell will actually move to where the market's at and start to change their price and or offer a concession to the buyer in order to get it sold. So we're going to talk about concessions too. I'm going to get there in a second. What do you think will happen with the rental market? That's a good question. Right now, we're actually seeing rents soften, and demand for rentals has gone down a little bit. So those prices have gone down. But I do think the more unaffordable it is to buy a house, people are going to have to rent. So that may change the rental market. Right now, we're seeing a lot of people consolidate households. So in order for things to be affordable, they move in with a roommate, a family member. So homes that were, spread out for a while, taken up by many people, are now being consolidated into other households. So although the rental market is not increasing because although we're seeing a softening in rentals, you would think you'd start to see it getting more competitive. I think we may get there, but right now we're just seeing people kind of consolidate households before everyone moves to renting. But right now, renting is more affordable than buying, and that wasn't the case months ago. So Joe says he's watching from Australia. Hello, good morning for you. Can you please do something on investment opportunities, something with good rental yield? Yeah, I can look into some things to share on that. Send me an email if you'd like and tell me more of, if you're looking for single family or multifamily and that kind of thing. Affordability in Phoenix has really suffered. We've been hardest hit by inflation, and incomes have gone flat down here. Yeah, inflation has been really rough on on Phoenix. So we're for sure seeing the brunt of that. So let's get into the Cromford report, because I know you guys all love that stuff. We're talking about new listings. And so it's interesting because I know I mentioned, or, the title of this is a standoff, right? So we have kind of a standoff between, we're not getting a lot of new listings on the market right now, but we're also not getting any demand. So we've got a lot of sellers that don't want to sell because they're comfortable with their mortgage payment and they don't have a good alternative out there and they don't have a reason to sell. And a lot of buyers who say, yeah, I'd like to buy, but I can't afford anything. So we're kind of seeing this standoff. Now, this is the Cromford report showing the new listings chart. It's the first 21 days of each October since 2005. And so this is our 2022 year right here, and we're at 41 new listings. And you can just see by looking at this, that's the lowest bar on here, going all the way back to 2005. So we're just really hurting for listings, which is a crazy thing to say when our market has softened as much as it has, but that's what's going on. We don't have a whole lot of inventory, and that's frankly what's saving us from actually having a crash, because we don't have an oversupply of homes because people aren't letting go of them. But alternatively, we don't have the demand either. So it'll be interesting to see if things change. I think if there is any movement in mortgage rates downward, we will start to see a jump up in activity pretty quickly, because I think the demand is there. It's just people waiting on the sidelines because they can't afford to buy, but they want to buy. So even the slightest move in mortgage rates, even if we went down to 6%, not even back to the 3-4% range, I think we might see a surge of demand. So that's what's going on with new listings. We're just kind of staying stable right now and having this standoff between supply and demand. So here's the Cromford Market Index. If you're new here, I follow the Cromford report, and this is their index that helps us understand supply and demand. So as I have on the screen there, a reading between 90 to 110 means we're in balance, and a reading above 110 is a seller's market, and below 90 is a buyer's market. So this is the first time the supply number has been above the demand number since 2014. So we're setting a new record essentially, or, a new baseline here. We officially have more supply than demand by a tiny, tiny bit, but it is the first time that we've seen that. Also, the CMI a couple weeks ago fell below 100 for the first time in a while. So we're at 97.6. But again, notice the supply index is very close to this number that the demand index is. So that's why we're, technically in that balanced range. Although we are in buyers markets in some cities and sellers markets in other cities. And I'm going to get into that in just a second here. And so, yeah, technically balanced according to the CMI, but not really. So this demand was 81, 82 a few weeks ago. It is starting to be impacted by rates. We'll see how much lower this goes down. And I don't know that supply is moving all that much, but time will tell, right? So let's look at our cities. I know you guys all love this chart because 1 week I didn't have it. I had like everyone asking for it. So the Cromford report is able to break this down between the major cities and their respective CMIs. And we've had some big change. So we actually, over the last month, we've seen a deterioration of the sellers market by 6.8%. And that is faster than what was happening the prior month, where we were at 4.6%. So that's looking on average, the change in the CMI for every city month over month. This month it's 6.8% instead of the 4.6. So that means we've accelerated in the direction towards a buyer's market, essentially. And so for the last, sorry, my face is here. Let me take my face off, guys. So for the last, what has it been? Maybe 2 months, we've kind of stabilized and not really seen a whole lot of deterioration in the seller's market. So we had up to 6 green arrows on here for a bit. And now we're back to having a lot of red arrows, barely any green arrows. And we're starting to see a change back towards the buyer's markets again this week. So we'll see if that continues. I think it will as rates continue to go up. And, we're also getting into a slower time here in Phoenix. It's seasonally a little bit slower, especially for buyers when we're going into the holidays. So we now officially have 10 cities that are in buyers markets. And so those are all of them below 90. So from Tempe down to Buckeye, those are all technically buyers markets. Then we have about 4 that are balanced markets in this section here. And then we've got just these remaining that are sellers markets up here. And I think what Cromford is saying, that it looks like all the cities except for those in the Northeast Valley are going to be buyers markets within 2 weeks. That's what they're projecting. So, if you're looking as a buyer in Fountain Hills, Paradise Valley, or Scottsdale, even Cave Creek, you still have to be somewhat competitive. Listings might go a little bit faster than you anticipate. Sellers may not budge as much, but everywhere else, you have a little bit more of an advantage as a buyer, especially when you're looking at the Surprise, Maricopa, Queen Creek, and Buckeye cities. Definitely much more leverage as a buyer. Is there any way to see CMI by zip code for Phoenix? Yeah, Lou, great question. There's not. And the reason for that is because there's not enough data within zip codes for them to create the CMI. So that's why it's broken down into these, quote, major cities. And they can't, there's some cities that aren't even on here I get questions about sometimes. And unfortunately, they don't have the data to be able to do that on a smaller scale. So that's why these are the only ones that it's broken down to. All right, so let's move on. I also want to talk about concessions, like I mentioned. Let me see if I can put my face back up here and you guys can still see this. Okay, cool. So seller concessions, a big thing going on right now. As you can see, 42% of sales had some seller concessions. And this is just in the last, the end of September. And so this should give me, here we go. And the median concession was $7,000. So if we look back in time, before things got crazy here after 2020, concessions were pretty normal on about 30 to 40% of sales. We saw that a lot going all the way back to 2014. Then concessions kind of went away over the last couple years, and now they're back. And now we're even higher than where we were at back in 2014. That's because we're in a market that favors buyers more than it did in 2014. We were just in a strong balanced market at that time, and now we're kind of in this like balanced teetering on buyer's market environment. So you can also see as the weeks have gone on, the median concession has gone up. So 3,500, 3,800, 5,000, and now we're up to 7,000 being the median concession that people are getting for sales. Also keep in mind, this is only collected once a sale closes. So this is really a lagging indicator. Sorry, you guys lost me for a second there. This is really a lagging indicator as well. I think my picture is frozen. My camera died. And so you got to keep in mind that this might be changing as we continue to progress through the rest of October. This could be a little bit of a bigger number on both the median concessions and the percentage of concessions that are being given. So good timing for my camera because I am actually wrapping up this presentation. And so I know you guys can't see me, but I am still here. I have I know I can put myself on the other screen, but having trouble finding that. Let me just get my camera back up. See, this is all new for me as I'm learning how to do these live streams. So, well, thank you guys for joining. Really appreciate you all being here for the live stream and asking your questions. I'll be back next week with another update, probably live next week as well. And if you guys have any questions over, the next week, all my contact info is in the description below where you can reach out. You can also ask questions to me there or get an instant home value, search the MLS for homes, and check out my relocation guide. So thank you guys for joining me. Have a great rest of your Monday, and I will see you guys all next week.